and welcome to the Capital Market Program on Channels Television. I'm Edidiong Iwang. The Chief Executive Officer of the Nigerian Stock Exchange, Oscar Onyema, says the exchange expects the revenue diversification drive of the government to elicit positive sentiment throughout the year. However, Mr. Onyema, who was speaking at the NSE's 2020 market recap and 2021 outlook, adds that the exchange's growth expectations should be noted with caution, I beg your pardon, due to the second wave of the coronavirus pandemic. Well, let's take a listen to what he has to say.
On a positive note, as the all-share index has already returned 1.72% after 9 trading sessions, whilst on a global front, the U.S. markets continue to look forward to a Biden administration as illustrated by a record-breaking Dow Jones performance in 2021 and the quick condemnation of the political turmoil in the U.S. We expect the marginal reopening of businesses, normalization of the economy, and revenue diversification drive of the Nigerian economy to elicit positive sentiments throughout the year. Our growth expectations should be noted with caution as the recent second wave of COVID-19 in Nigeria and indeed globally may slow down renewed social and economic activities.
Well, we've heard various reviews of the market in 2020 from regulators and market operators, but in all of these, how did the market perform from a legal angle? Ochidebere Odoemenam, an associate at Aluko and Oyebode, joins us now to get a sense of how the market performed from the legal standpoint. Good evening, Chidi. Thanks for joining us on the program.
Good evening, Dijong. Thank you for having me on the show.
Well, Happy New Year. I would like to say that as well.
Happy New Year to you as well.
Well, okay, let's begin with a review of 2020 now. With the COVID-19 pandemic, the NSAS protests, the lockdowns, and all of, with everything that came with that. How was the year for Aluko and Oyebode?
2020 was an interesting year, not just for us at the firm, but for the legal services industry in Nigeria, in general. I remember in March, when the initial lockdown was announced, we had to implement work-from-home measures. We had to implement remote working, measures to ensure that we continued servicing our clients. And I think that, for all of us in the markets, nobody has ever practiced law in a pandemic before, so it was all new to all of us. But what we had to do was we had to sit down, look at our business continuity plans to ensure that these events that you mentioned did not affect the way in which we provided services to our clients. Last year, we continued to work on some of the biggest deals in the market, mergers and acquisitions, capital markets, oil and gas, and finance. And by and large, I would say that the effects of these events, like you mentioned, were not as bad as we initially feared. A&O closed the year pretty strongly last year, 2020.
Okay, so, I was going to ask the impact, that had on deals and activity in the market, but what were some of the major deals in the market last year, from the equities markets, the debt market, and were there any mergers and acquisitions last year as well?
Okay, so I'll start with the debt capital markets. In the first quarter, towards first quarter and second quarter of the year, we saw the impact of the pandemic. We saw the impact of the crash in oil prices in that market. We saw uncertainty. Investors were very skeptical about putting their money in the market. So we didn't see a lot of activity, for example, in debt capital markets. In the third quarter of the year, the debt capital market recovered due to quite a number of factors. And I would say first, the CBN policy that restricted trading in automobiles and other risk-free fixed income securities. What this caused was excess liquidity in the market. And this excess liquidity was pumped into the debt capital market. Blue chip companies saw an opportunity to issue very cheap securities because of the low yield, low interest rate environment in the market. Last year, we saw some very large-sized issuances. Dangote Cement PLC did an issuance via an issuance of bonds. We also saw MTN issued commercial papers last year. We also saw activity on the government side. The Lagos State government and the Ondo State government also raised finance via bonds. On the equity capital markets, again, I remember that the NSE closed the year as the best performing stock market in the world. But then again, the factors that drove that, wasn't, not different from what drove activity in the debt capital market. Okay. Again, we had that excess liquidity. Investors were pumping money into Nigerian stock because, there were no a lot of options for them to invest in money into.
Environment in the debt market.
But I guess that where we saw the impact of the pandemic, the crash in oil prices, was in terms of fresh listings, IPOs. There was no IPO in the Nigerian capital market last year. There was a listing, BUA Cement PLC listed, but this was via the merger of the cement company in Nigeria and Oba Cement PLC. Apart from that listing, there was no IPO in the Nigerian capital markets last year. Last year, we saw the biggest rights issue in the capital markets. International Breweries PLC raised capital from its shareholders. E-Transact and I believe Transcorp PLC also raised capital from their shareholders in rights issue. And in terms of mergers and acquisitions, that market is very sensitive to how the economy performs, right? In first and second quarter, we saw a lot of capital flights. We didn't see FDI coming in. Investors were very skeptical, about doing deals in the M&A market. But we still saw considerable activity in the M&A market. Stripe acquired Paystack in what is the largest fintech acquisition in our history. Access Bank PLC continued these expansion plans via the acquisition of various subsidiaries outside Africa. And there were some series funding, seed funding for startups here and there. But by and large, we didn't see as much activity as we've seen in previous years. And I guess that this was because of the events that you mentioned, the COVID-19 pandemic, the crash in oil prices, and the NSAS protests.
Let's talk about regulation now. What were some of the key regulatory changes in the market, and how did these, changes impact or affect the market?
So last year was also a busy year for regulation. And starting with the Finance Act 2019, I remember that the NSC, the SEC, both have been lobbying for tax incentives to drive, development of the primary and secondary capital markets. Last year, that act was passed. That act contains significant tax incentives for the capital market. First, it reduces the tax footprints for rates in the market. It has tax incentives that encourages securities lending transactions. And then finally, it also has tax incentives that will promote and encourage small and medium-sized enterprises, to raise capital in the market. Again, on regulation, last year the NSC released the rules for its growth board. This was, before the NSC launched the growth board, and that initiative is very important because the NSC has been trying to get these high growth companies to come list on the exchange. The growth board rules is different from the listing rules we have for the other market segments. It contains less stringent eligibility rules. It contains favorable corporate governance rules to encourage these companies to list on the exchange. The SEC also exposed the draft crowdfunding rules, and this is very important. Again, I must highlight this because we've been seeing companies try to raise capital from the public via crowdfunding, and investors have been asking, is this legal? Should we invest in this? The SEC decided to step in and to try and regulate that space. The SEC exposed its draft crowdfunding rules last year, and we've sent in comments from the market. The SEC should release the final rules this year, and ultimately, when the rules are passed, we are going to see a more regulated, crowdfunding market that will, give investors confidence when playing in that market.
What about compliance with capital market rules by operators? How did that play out? And was there any sanctions put in place to address non-compliance?
I think to answer your question, I would first, say that in previous years, the NSC, the SEC, they've been very proactive, in terms of ensuring that, these companies comply with the rules. Okay. The NSC and the SEC we've seen them come out and issue circulars, press releases to say don't deal with ABC company because this company doesn't have a license to trade in securities, for instance. And last year wasn't any different. I remember that last year the SEC released various circulars to say this company came to me for a license, but we did not give this company a license. And this company went ahead to trade. Do not deal with this company or deal with this company at your own risk. It wasn't just one instance. There were also a couple of other instances where the SEC came out and issued such warnings. Again, I recall that the SEC had published a list of capital market operators. The SEC said that these companies, either they were inactive in the market, either they did not pay the dues, they did not just fulfill the requirements and the rules. The SEC asked them to show cause why they would, not, be struck out, as capital market operators in the market. So, in all, I would say last year the SEC, the regulators, were very active, to ensure that the rules were complied with in the market.
Okay, what did regulators do in ensuring waivers to help companies and capital market operators? Were there any rules? I mean, with everything that was going on, were there any waivers or anything?
Okay, so in that regard, I think we need to put things into perspective here. Looking at the impact the pandemic had on businesses, right? The pandemic, the lockdowns, it affected internal governance requirements. It affected the ability of these companies to conduct their audits. And the SEC, the NSC recognized this. And, what they did was they said if because of the lockdown, if because of the lockdown, you're not able to conduct your audits, you're not able to prepare your books, then the SEC, the NSC gave them waivers, extended the period for them to make filings. Early in the year, in March, the NSC suspended the application of some of its rules that mandated these companies to file returns for 2019 because of the impact the pandemic, the lockdown had on their businesses. The SEC also followed suit. The SEC issued grace periods to these companies to extend the time within which they're required to make their filings for their financial statements and their audited reports.
Okay, so let's just, move to restructuring now, starting with FMDQ, for example, now, and the introduction of new entities within the group. How did all of this play out, also from a legal angle?
So the FMDQ has been transitioning from what used to be just an OTC, over-the-counter exchange, to a fully fledged securities exchange. Last year, the FMDQ, restructured. FMDQ now has quite a number of subsidiaries in the group. We now have FMDQ Holdings PLC on top of the group. Like you mentioned, FMDQ Clear Limited, FMDQ Depository Limited, and there's also FMDQ Private Markets Limited. Okay. And this is in line with the FMDQ's goal, to transition from an OTC exchange to a fully fledged exchange. And I think that what the FMDQ is doing is very important for our capital markets because we are transitioning from a mono exchange market to a market where you have, healthy competition between our securities exchanges.
Okay, so we'll just, hold your thoughts there and we'll continue this conversation when we return in just a moment. Please stay with us. Welcome back and thanks for staying with us on the program. Chidiebere Odoemenam, an associate with Aluko Anoyebode, is still with us on the program. And we're getting, the outlook of the market from a legal perspective. Now, before we went on that break, we're talking about restructuring. The NSC, has gone full in with its demutualization plans and all of that. So from a legal standpoint, Run us through that process. What's the significance of that, and what phase is the exchange at right now?
Okay, this transaction is very personal to me. It's very personal to all of us at Alucon Ebody. We've been advising on this transaction since, I believe, 2015.
Okay.
So we're all looking forward, to a successful completion of the transaction. The transaction started officially in 2015, and the goal of this demutualization is to see the NSC restructure into a fully demutualized exchange. Right now, we have about 56 demutualized exchanges in the world. If the NSC demutualizes, it's going to be the third in Africa, after the Johannesburg Stock Exchange and the Nairobi Stock Exchange. And the ultimate goal, what we're trying to achieve here is to create a group structure where we're going to have a holding company that will sit on top of the group, that will oversee the group, right? What we know as NSC right now is going to be moved to a Nigeria Exchange Limited. That is going to house the exchange business. We're also going to have NGX Regulation Limited. This is going to self-regulate the exchange. Then the NSC is going to transfer properties from some of its subsidiaries right now to a new entity that will handle the investment business. It's going to be the investment arm of the exchange. The current members of the exchange is a company limited by guarantee right now. It's going to become a company limited by shares. The ordinary and daily members of the exchange are going to be given shares in the exchange. There's also an opportunity for stakeholder groups and strategic investors to come hold shares in the exchange as well. In terms of where we are right now, in 2019, the NSC obtained pre-approval, or what we call a no objection, from the SEC to go ahead with the transaction. Last year, the SEC, last year, the members of the exchange approved the transaction in a court-ordered meeting. The NSC also made a filing to the Federal High Court. The Federal High Court has sanctioned the scheme. The NSC has gone back to the SEC to get a final approval for the scheme, and that is what we are waiting for right now to complete the mutualization transaction.
Okay, just, still, you mentioned the NGX regulation, that would be regulating the exchange. Wouldn't there be any conflict of interest? And if there is any, how is that maintained? How is that, put in check?
I think the ultimate goal, really, of even introducing NGX Regulation Limited is to avoid what you've called a conflict of interest. The NSC is trying to, separate that regulation and put it into, a company, a proper company, instead of letting it sit within what is going to be Nigerian Exchange Limited. So, in my view, that is, putting NGX regulation as a separate company within the group is going to give some form of arm's length, some level of independence. I mean, they're all in the same group, but we're still going to see some level of independence in terms of regulation.
Okay, let's talk about the derivatives market now. What regulatory strides were made in 2020, and what's your outlook for that market in 2021?
Last year was a very important year for our derivatives market. Last year, we saw the passage of the CAMA 2020, that's the Companies and Allied Matters Act 2020. Before that act was passed, we in the market, we've been clamoring for, a legal framework to regulate derivatives. We've been clamoring for risk management tools, to give investors that confidence that you can trade in this market, you can do business in this market. That market is very important for liquidity for the general capital market. So finally, last year, we saw the passage of that act. It contains what we call netting provisions. Okay. Netting provisions, is a risk management tool for the derivatives market. And the goal here is to ensure that investors have the requisite confidence, that confidence they've been clamoring for to play in this derivatives market. In terms of exchange-traded derivatives, the NSC and the SEC have been working hand in hand to ensure that we have, a proper market for those sort of products. I know that the NSC has obtained pre-approval from the SEC for its subsidiary NG Clearing Limited that company is going to, provide clearing functions for derivatives products in the market. And I guess in terms of outlook, if the NSC obtains the final approval from the SEC from that, for that subsidiary, we are going to see a more structured market for derivatives in 2021.
Speaking about 2021, what's your outlook for the market this year, the equities and the debt market, in terms of deals, and activity? What should we be expecting?
A lot will depend on the factors that drove activities last year.
Okay.
For example, like I mentioned earlier, for the debt capital markets, activity in that market was driven largely by, the excess liquidity in the market, which was also in turn driven by CBN policy restricting trading on automobiles, or the CBN just not supplying enough risk-free fixed income securities to mop up liquidity. So if the CBN does not mop up this liquidity in the market in 2021, we are still going to see a low yield market. We're still going to see a low interest rate market. This would attract companies. There are companies that have existing debts, that are paying higher interest rates. They will come to the capital markets, they will raise finance via bonds or commercial papers, and they will refinance their debts. There are companies that need money for working capital. They come to the capital markets, they raise money to finance their working capital requirements. So we are already seeing activity this year. BUA Cement PLC has already done the largest bond issuance in Nigeria so far this year in January. We're also seeing considerable activity in the commercial paper markets as well this 2021. There have been talks in some quarters that the CBN is going to mop up this liquidity via the issuance of special fixed income
bills, yeah.
securities. So if this happens, that liquidity will be mopped up because FGN securities are risk-free when compared with securities issued by corporates. So the investors, the PFAs that are putting money in Nigeria corporate bonds may look at their allocation plans and may want to go back to investing in what they are used to investing in, the risk-free federal government securities. For the equities capital markets, same factors would affect it. Again, it's because of excess liquidity that we're seeing investors putting money into Nigerian stock. If that liquidity is mopped up by the CBN this year, then we're not going to see the level of activity we are seeing that made the NSC the best performing stock market last year. Okay. M&A fresh listing activity would be largely dependent on whether or not we see how our economy is going to perform. Investors that play in that market, they are very wary of, they don't like a blurry economic outlook. Yeah. They want a level of certainty before, investing, before playing in the market. So in terms of outlook, I would say quite a number of factors will shape how the markets will play out. But I guess we can just wait and see how things unfold.
Well, very quickly, just before I let you go, you mentioned CBN. We have the first MPC meeting next week on Monday and Tuesday. What would you be expecting the CBN to do? Losing rates, tighten, or hold rates? What do you expect?
Well, I think a lot of what the CBN is going to do will depend on, again, the factors that affect our general economy. Okay. So, for example, we are seeing a second wave of the COVID-19 pandemic. We are seeing the inflation rates. So the CBN is really going to sit down. The MPC is going to sit down. Look at where we are in terms of the factors right now. For example, there are talks about when is the vaccine going to get to Nigeria. We are seeing rising cases for the COVID-19 pandemic. These factors are really going to determine, what policies we are going to have. Where are you going to touch, where are you going to tighten, where are you going to let be more loose for the CBN.
All right, Chidi, thank you so much for your input on the program. Always a pleasure having you on the show.
Thank you for having me.
Chidi Odo Emenam is an associate at Aluko and Oyebode. Well, that's it on Capital Market tonight. Thank you for watching. I'm Edidio Ngiwang. Please stay safe.